about long single wicks. Without looking for a specific candle formation in the forex market, the one thing that I pay most attention to would be the length of a candle wicks. So whatever the length of the candle body, a long single wicks will often point to a change in direction, right? This is simply explained. When there's a bull or bear market, the long single wicks that is abnormally long, which you will see in the forex chart, will definitely help to change at least 70 to 80% change in direction, either bullish or bearish. So a long wick on a single candle means that during the formation of the candle, there was an unusual aggressive battle. So the bull and the bear are battling together to know who is going to win. So there's a lot of liquidity being pumped into it. The sellers are taking charge, then the buyers enter the market aggressively, and they keep battling of who is going to win the market, right? So whichever side was able to push charge back to actually form the we generally keep pushing. So anybody that wins in the market, either bull or bearish, will keep pushing the market at least to some pips away, 50, 100, 150 pips away before continuation of the trend, right? So an initial power surge upward by the bull is meant to retaliate by the bear. You see that the same thing vice versa. If the bear are powerful and the surge is very high, it is meant to be retaliated by by the bulls. So the bear defending their control over the market will continue to be aggressive for a short while afterward, right? Now, if you take a look at this upper wick here, look at this upper wicks here. So this is a long aggressive wick. So there is a heavy momentum in the market that is going bullish. Now the surge of bears now came into the market and keep pulling the market down. You have something like a momentum move up and down, aggressively moving up, aggressively moving down. Now at the end of this candle, we have a small body wick which is below this which has a small body closing below. Now the next candle will open in a sell with a sell signal, or with a red bar, which will trigger a downtrend. And the downtrend, you can have at least 70, 80, 100 pips depending on the time frame this appears. So you can see small wicks, but the kind of wicks I'm talking about is long, aggressive, abnormal wicks, which you can see in the forex chart, right? Now the same thing applicable to the long wicks, right? We have a momentum of downward trend, market going bearish. Now the last candle now appeared with a long sell, which that wants to turn to a railroad track candle pattern, right? Then when the candle forms a long sell, then the bull market now enter the market, and they keep aggressively fighting themselves, right? Now the bull now won the market, which will have a small body here. Remember, the body should not be a tweezer top body, like a small tiny body. No, we kind of have a body like this, or more like a half of it, something like that. But basically, we are looking at for a long single wick. That is abnormal long single wicks. So when this candle closes and the bullish candle closes below beside it, that will trigger a bullish movement, which will just go a short afterward before continuation of the trend, either bullish or bearish, right? So let me switch to actual chart so you can be able to understand what I'm trying to explain. Now this is the chart, EURJPY, right? Now we have a momentum of market going bullish. Now this is the last candle, and if this candle closes above this area, we will call it a railroad, and we're going to have another abnormal bearish candle trying to undo what it does, but it didn't happen, right? Now the market went up. Now the bearish buyers, the bearish sellers, that's the bear market, the bear liquidities now pushed into the market. The bear sellers push into the market. People that want to sell push into the market and keep on pushing it down, and they are fighting on who is going to win and who is not going to win, right? Now the bear market aggressively won the battle on this liquidity impulse here, right? Now the next candle beside it, is bearish. So this can be able to trigger a complete downtrend. And some people trade this when we have something like this. You wait for a candle, something like this, to close below this bullish candle, then you can be able to take a downtrend. And some people might track this as an order block, then a break in market structure before a downtrend. And here again we have another block which triggers a pullback, retest, and what continue downtrend, right? So let me not move into other block and other things, right? So this is aggressively long candle with long wicks. Have you seen the size of the wicks, right? So the longer than average what upper wick. So the wick is very high. You can see other wicks here, but it's not bigger than this one. So we are looking out for this in the market, most especially on the higher time frame, like 1 hour. You can see this in 1 hour. At least we are sure of at least 100 or 150 pips in the market downward, right? Now take a look at the bullish what. This was bearish for long wick single candle wicks, right? Now this is a what a going if you want to go bullish, right? Now we have this long one. Assuming we have another bull, we can call this a railroad, right? But no, then we have is another bear move right here, and the bullish people enter the market. So when they enter the market, what happens? They keep fighting aggressively, and the bull won. The next candle closed above it. This can trigger what a bullish what trend. And when you entering this trade, maybe here, right, because of this candle, maybe you enter this trade here, set your stop loss below here or here, then your take profit should be in the next swing high, either here or this other block here, which the market may tend to what mitigate or tend to what retest before continuation of what downtrend. And if you can see now, this wicks, this is weak, like we call it preserve top or call it preserve top, yes, right? And see where this thing closes. It's not the same thing with this, right? And you can see other rejection candles here. It's not the same thing with this. So this long candle, single long candle wicks is most appears in the forex market on JPY pairs and other pairs. You can be able to search for yourself. So that is that about long single wick candle pattern. So thank you guys. Watch out for next lecture. Bye for now.